House Republicans have proposed increasing the child tax credit to $2,500 per child for the 2025 tax year. This is a $500 increase from the current $2,000 credit. The existing credit set by the 2017 Tax Cuts and Jobs Act has helped many families. The new proposal aims to build on that support. The child tax credit, introduced in 1997, has evolved over time. This latest proposal is part of a larger tax bill. Its passage depends on many factors, making the legislative process complex. Families should be aware that this is one piece of a bigger puzzle. The overall impact will depend on all parts of the bill. Lawmakers will debate the details in the coming months. This is a significant potential shift in family tax policy. The proposed $2,500 child tax credit would be in effect from 2025 through 2028. After 2028, the credit would revert to $2,000 indexed for inflation. The $2,000 credit, established by the 2017 Tax Cuts and Jobs Act, would become permanent. The $2,500 credit is partially refundable, benefiting families with lower tax liabilities. Currently, up to $1,700 of the $2,000 credit is refundable. The refundable portion is linked to a family's earnings. Details on the refundability of the $2,500 credit are still being clarified. This helps families estimate their potential refund, crucial for financial planning. The child tax credit is available for qualifying children under 17 with a valid Social Security number. Income phase-out thresholds remain the same, $200,000 for single filers and $400,000 for married couples filing jointly. A new requirement is that both parents must have a Social Security number if filing jointly. This could impact families where one parent lacks an SSN. Estimates suggest this provision could affect up to 4.5 million children. These children might qualify based on their own status, but their parents' SSN status could prevent the family from claiming the credit. This is a point of concern for immigrant families and advocacy groups. The potential consequences are substantial for these households. The proposed $2,500 child tax credit may not benefit all families equally. Lowest earning families might not see the full advantage due to low income and tax liability. Chris Cox from the Center on Budget and Policy Priorities notes that 17 million children are currently left out of the full $2,000 credit. The plan aims to provide financial relief, particularly for middle-class families. Increased disposable income could boost consumer spending and economic activity. The child tax credit is seen as a tool for economic stimulus. This proposal is part of a broader Republican agenda to reduce tax burdens. It reflects a particular approach to fiscal policy and family support. The proposal is connected to a multi-trillion-dollar spending package. Understanding this political context helps to see the CTC proposal as one element of a larger economic vision. The child tax credit has been a subject of bipartisan discussion and disagreement. A bipartisan House bill in February 2024 aimed to expand access to the CTC but failed in the Senate. This illustrates the challenges in reaching a consensus on CTC reforms. Senate Republicans, including Senator Mike Crapo, have indicated an openness to discussing a solution. Critics argue the new proposal disproportionately benefits wealthier families. The design of the credit, particularly its refundability aspects, needs to be more generous to help families most in need. Some analysts suggest the proposed changes could cost more than extending the 2017 tax law provisions. The debate reflects fundamental disagreements about tax fairness and effectiveness. The path forward will depend on negotiations and finding common ground. The willingness to engage in dialogue is a positive sign for those hoping for CTC enhancement. Please subscribe, like, share, and comment.